Brilliant. Well, welcome everyone. Happy Tuesday. Lovely to see you all. Thanks so much for joining us. I'm really excited to get to delve into this topic of financial sustainability. A lot of times when we talk about sustainability, we either immediately jump to climate or we might be thinking about social, but actually, this third pillar of financial sustainability tends to be one of the biggest barriers in terms of engaging with sustainability in a holistic sense. And it's not just about us being financially sustainable, which is, as we know, a huge conversation within the cultural sector, but it's also about what we're doing with our finances. And I think a lot of you, if you're anything like me, might not realize that where your money sits is actually has a big impact on the environment and on social justice as well. Because actually, what happens is that when your money is in a bank, the bank might be investing in fossil fuel companies or in companies that don't have such great labor laws. And there's a lot of underlying elements here that, as cultural professionals, we tend to miss out on in terms of our education. So it's really exciting that we're going to be launching this series on sustainable financing. And I'm hugely honored to have our first guest with us today, Breen Murphy, who's going to be talking a little bit about the overall topic of investment and sustainability, what they have to do with each other, and then presenting one of his solutions on how we can actually put our money where our intention is. So, Breen, if it's okay, I'm going to turn over to you. Take it away.
Oh, yeah, please. So my name is Bree Murphy. I'm the president of Carbon Collective Investing. We are a climate investor. We focus mostly on 401ks and 403bs in the United States. We also have a series of ETFs, one of which we just launched. One is a short duration green bond fund, which that came out last month. And another one is a climate solutions stock fund, equity fund. That's called CCSO. So we also have options for individuals in the United States, and that is a little bit of background. Now, investing is something that has been under taught where we are at in the United States. I can't speak to what is available for education in other areas of the world, but I tend to find that it's not much better in other areas either. As a result, people don't think about it that much, even though it's a huge lever for what we need to do to help solve climate change. One resource that I'll put in at the beginning is if you are at an organization in the United States, you can look up how much you have invested in fossil fuels in there. Now, in this, you can see like some of the big ones. Like on that first page, you can see a sample retirement plan. And you can look at Google, for example, and Google has $1.6 billion invested in fossil fuels through their 401k, right? Billion with a B, right? So it just gives you an idea of the size of investment that we have in our 401ks. And the unfortunate part is this part, 401ks, is an area that has been really narrowly defined. And as a result, almost all the big institutions, even the ones that you think are really climate forward, also have big investments in fossil fuels as compared to how much they have in their portfolios. So today I want to share a little bit about just very general around climate investing and how we like to think about it. Yeah, thank you, Caitlin, for chiming in that 401ks are U.S. retirement funds. But I want to talk about a different approach that I think might be more helpful for people in thinking about a new framework that may get more investments into climate solutions. So with that, I'm going to jump in. Let's see here. Okay, that's the one I want to do. Can you all tell me if you see a green screen?
Yes.
All right, we're rocking and rolling. So there's a few slides in this. I'll try to be fairly brief so that there's a lot of time to explain, answer questions, all that stuff. The most important thing that I want to share as it relates to investing in climate solutions is that the International Energy Agency, that's this stat, but there's the IPCC, they kind of have two main precepts, which is we need to stop investing in the expansion of fossil fuels, and we need to dramatically increase our investments into climate solutions. Now, when they talk about climate solutions, they are not talking about sustainable companies, though that helps, right? Because if you get, Microsoft and Google to purchase renewable power to offset to power their data centers, that's helpful. But it's climate solutions at large. So solar, wind, heat pumps, dynamic glass, batteries, plant-based diets. There's a whole list of these solutions that we like to use as a primary reference on Project Drawdown. If you want to nerd out, I'm a nerd, so I like nerding out. So that is the two main things. Stop investing in fossil fuel expansion. And this is not to say that fossil fuels will go away, right? And that's something that's important. It's saying that we don't need to have more infrastructure. We understand that this transition will happen. And as a result, what we really need to do is make sure that the money invested is going into these different solutions. That is not currently happening today, and we need to change that. Now, when you look at our current paradigm, our current public market paradigm, these are stocks and bonds that you can buy in your retirement accounts or through if you have a pension, your pension may have more sophisticated options, right? Like they might be able to invest in private markets like private companies or private loans. But public market is largely dominated by Vanguard. Vanguard is what's called passive investing, and it basically says we need to invest in a little bit of everything and just have it low fees and high diversification because our market is more or less it's efficient, right? So it's like this is the best way to invest. It is not in alignment with the strategy that the International Energy Agency says, right? It has twice as much invested in fossil fuels as climate solutions. So today I'm going to start going through just a little bit of the basics. The first thing is the most important thing is past performance does not guarantee future results. These are investments, they go up and down. And so I want to make sure that this is, the other thing is like, this is not, because this is a more international audience, this is not an offer to like sell anything around Carbon Collective, especially if we can't offer it in other areas. We're only in the United States. I know this is super boring, but it's actually really important. Investing is a more or less a belief statement about the future. And it's like, what do you want your future to be? All right, so why investing matters. I'm just going to start with some basics really quick. Like, why do we even need to think about this? Especially public markets, right? Because the public markets are what's called a secondary market, right? So when you think of like a secondary market, think of, if you like to shop, Poshmark, right? If you like to collect things, think eBay, right? These are things that have been already created and then are then sold again because the public markets, most of us as regular people don't have access to what are called IPOs. And that's when companies that are private sell huge stakes or raise a bunch of money by going to the public markets. And then after that, it's buying and selling on the market. But the first thing is, if you do that, if you're engaging in the public markets, which many people are, the number one thing is you get to vote. You probably don't even know you get to vote or have even thought about the fact that you get to vote, but you are an owner, and as an owner, you have rights. And so one of the most famous voting situations was in 2011 or 2021 when Exxon had 3 board directors that were climate advocates join their board. And that's a powerful display of showing where we can go as voters. It has not been as effective as we would like because Exxon has since walked back their climate commitments, but it does show what is possible. The second thing is cost of capital. This is an incredibly nerdy term. And Caitlin, when you were like, can you jump in and explain this term to me? This would be one that I would do. Um, Cost of capital is how easy is it for you to get the money you need to grow your business, right? Now, if you have a really fast growing stock, this is basically saying to the market that you all are likely going to have a lot of demand, and as such, banks want to have more predictability. And so like if they're like, oh, this has a lot of demand for the future, that means a lot of predictability. I can lend here. And like let's go back to those secondary markets for a second. A good example is I'll use sneakers or Pokemon cards. My kid likes Pokemon cards, right? Um, if you see how expensive some of these Pokemon cards are, right? And there's like $5 million valued Pokemon cards, right? Like, which I think is absolutely obscene. There's like an original Pikachu. That means there's likely a big audience for people. And so Pokemon can keep issuing Pokemon cards and making money that way, right? That's a good sign. So whoever's backing Pokemon cards is like, this is good. Like we've struck gold. Let's keep financing this. And so for these companies, it's easier to get money, whether that's loans or more investment. You've seen this like most famously right now, it's with Tesla. They've been able to get really good financing terms. And the reverse has been true, right? If your stock is not performing particularly well, it can be harder because banks are like, we don't know if you are going to be doing well. Now, up until 2021, this was actually negatively affecting fossil fuel companies. And this was like a really nice sign to see. They've had one of the worst performing sectors of the economy over the last 10 years, but they had a really good 2022. And there's a lot of articles talking about like how expensive it was to expand in fossil fuels. And so even now you're seeing things like they're spending their money on buying up other oil companies and a little bit less on expansion, this is good. So cost of capital. And the third thing is narrative. Look, like investing more or less, we forget this all the time, but it's a belief statement in the future. What do we think the future holds? And coal back in 2011 hit a peak and we started to phase out coal. Now, coal, as a result, is something we still use it in our energy systems, but it dropped 99% in the stock markets, right? And to the point in which it was delisted. And we're seeing coal continuing to be phased out. This is really important. So there's three big impacts that we see. So passive investing, I'm going to go back to Vanguard, is like, this is a very nerded term, is unable to price in, it was basically built on this idea that if there's so many people buying and selling, that the price that they choose is efficient. And so you don't need to focus on getting a great deal. You just need to buy the market. And so it's been really successful at doing this because it's showing that the performance has been very valuable. Because before it's like, I'm sure you've heard the term of like, stock picking, you buy a stock and you try to see how well it does. And then so a lot of people have this mindset of maybe I can beat the market. It's really unlikely. That's more or less what's been shown. So it's been shown this has been a really high performing area. However, it's become so popular that is changing the old paradigm. So it used to be long-term investors would be sending price signals that would be looking like factoring in climate change, right? Something that's maybe not as, it's not going to affect markets in a short term, but it is here. It is affecting things. But this is still a longer term trend. Long-term investors used to care about this, but what has happened now is longer-term investors are not factoring in like price signals because they're just buying the market. So we're seeing so much right now about the market is only factoring in what short-term investors think about, which is like inflation is here, interest rates are up, so let's not invest in renewable companies, right? Even though renewables are exponentially expanding and that cost curve is only going up. And you'll see that a little bit later. What this means is like short-term investors are making these passive investments. are unable to price in risks, climate risk, biodiversity loss, rising seas, wildfires, cost of insurance. That's been the big one recently. If like I live in California, it's been much harder to get homeowners insurance because of wildfires. This has also been the case in Louisiana and Florida for literally the opposite reasons that reach the same conclusions. Florida, they don't want to use the term climate change when they're talking about policy. California is trying to protect policy owners and by only using old models, but old models do not factor in future results. And so you have people trying to protect their constituents in different ways. It's ending up in the same results, which is insurance companies are starting to back out of these areas, and insurance is getting more expensive as a result. There's also the opportunities, though. Electric cars, it is the only area of the market that's expanding. So this gets into like why our argument for sustainable investing, being smart on climate, will outperform. So the first one, and you started to hear me hint at it, fossil fuels have not been necessary for long-term historical performance. Looking at the data in the past, Jeremy Grantham is, so this big piece of research is a little bit old. It's like 6 or 7 years old. So 1925 to 2017, if you're looking at oil, and because like we hear this all the time, record profits, right? Like who has anybody heard about like how good the business is of oil? All right, you're like record profits. Okay, but when you look at it over this 92-year period, it only represented about 0.05% outperformance over that time. That is so small, right? So if you have $100,000, 1% would be like $1,000. If you have 0.1% would be $100. Like, so you're looking at $50 of outperformance over that time. So this is not a significant amount. It is something, but not a lot. Now, if you look at what's happened since then, this slide is a little bit old. It's kind of been level since this data point. But you've seen that oil has actually underperformed recently. In the last 10 years, it's been the worst performing sector. 2022, you can see is like the big year where it catches back up, like this period. And that's when Russia invaded Ukraine, so we stopped, buying Russian oil. So the demand is still there, but the supply is down. So basic economics. I'm not sure leaning on an external geopolitical event like a country invading is a great business model. So that's something that we like to look at. Now, number two, so that's backwards, right? This one is more forwards looking. Fossil fuels have never faced competition like this. When you're looking at fossil fuel use in 2020, this is a little bit old, but these are like really comprehensive data sets that take a long time to build up and release. You're looking at 60% of its usage is in transportation and electricity, right? Like this is where it's dominant right now. But technological disruptions are happening and they're happening fast. This is an old one that has this is the last major energy transition we've seen. You're looking at, New York in 1900 to 1913. It goes from like there's one horse and buggy that you have to circle it. It's so hard to see. And then in 1913, you see how much it's changed. It's cars everywhere. And this is looking at the virtuous and vicious cycles that come with technological revolutions. So you're already starting to see this where virtuous cycles, there's more variety. Like how many more electric cars are there? Economies of scale. How cheap is it to get solar? Better capability. How long is the range on electric cars? More public acceptance. People that you never thought would get an electric car getting an electric car. Lower cost. It's really cheap. Like Teslas, people talk like, oh, how cool is it that you have a Tesla? But it's actually like kind of priced in like a normal sedan. Higher revenues, right? Like you're seeing these different, like that one is a little shaky and higher margins, but you are seeing more investment and more government support. So it's not perfect, but you are seeing this big shift. Vicious cycles, reverse economies of scale. It's really expensive for us to frack. Less. Do I have someone talking? or asking a question? No, I'll keep going. Less public acceptance. You're literally seeing people protest in so many different areas, including like upper echelons of finance, right? People in the EU are looking at how do we, because climate risk is affecting inflation, right? Like if you have crops that fail, it's more expensive to get those crops. Like we've been seeing, like sriracha has been really expensive this year. Coffee's been really expensive this year. I know, like you smile, you're like, oh, I didn't realize. Chocolate is getting more expensive, right? I like you're smiling at this, but like this sucks. Um, I like coffee. I like chocolate. I like sriracha. But you're seeing that's affecting inflation. You're seeing higher costs. Um, we are not quite seeing lower revenue or margins. The revenue and margins are probably the biggest weakness we're seeing in the transition, but there is less investment. There's starting to be less government support, and there is less social license. So this is happening fast. All right, but we have these two sectors we wanted to point out. Transportation. EVs, they are becoming much more like efficient. They're much better cars, right? You can go far, you can take them places. The only growth in the market that we're seeing right now is in electric vehicles. I know there's been a lot of headlines about EV growth is slowing, and it has slowed, but it's still growing, right? Whereas we've hit peak car sales and internal combustion engines in 2017. There's been no growth in that area since 2017. This data is old, but like look at this, it's at 8%. In like 2023, the last time I was looking at this data, and China was up to like 35% of car sales. So you're just seeing this like really start to ramp up. Now, that's in transportation. I want to look at electricity. So in 2020, 20% of all US fossil fuel use and 61% comes from fossil fuels. But we're starting to see these huge economic tailwinds, and this is only accelerated with the passage of the Inflation Reduction Act in the United States. It is so much cheaper to add electricity generation that is renewable. And so we're just seeing this cost curve or this adoption curve just bend up. Like we both need to exponentially scale these solutions. And if you're investing, it's oftentimes much better to invest in things that are exponentially scaling, right? Like you're looking for compound interest, 6, 8, 10%. And then just looking at the broader sets of issues, a warmer planet is bad for business. And I think the key one that we think about is largely in inflation because it has so many of these bullet points that underpin it. You have more damage to critical infrastructure. That means it's more expensive to build things. You have less predictable crop yields. I've already talked about that. The chocolate and the coffee. Rising insurance costs. I've talked about that. Critical infrastructure and insurance costs, that means a less predictable real estate market. Haven't seen that so much. A little bit in the commercial real estate area where that's softening, a little bit of like remote work. More GDP spent on disaster relief. This is problematic. There's way more lawsuits, and there's more political instability, right? I mean, there's a lot of political instability no matter where we are. So when the pain is bad enough, legislation will come. We're starting to see these super funds pop out to pay for the damage that are happening in these states. Vermont just passed a super fund that is going to force fossil fuel companies to have to pay end. You're also seeing it in plastics in California, where I live. There's extended producer responsibility for the amount of pollution that we're getting. And so you're starting to see this, way more lawsuits are happening, and there may be an end of fossil fuel subsidies. I'm skeptical on that one happening. I think what will be more likely is the lawsuits and carbon tax will offset the benefits of the fossil fuel subsidies, just because humans were weird. It's really hard to take away a benefit, and I just see that one being the last one to go. Even though if we were really holding tax, if we were really protecting taxpayers, we would get rid of this. I just don't see it going away soon. So I want to be realistic too. So when we're looking at the markets, we're looking at fossil fuels are being outcompeted in transportation or being outcompeted in electricity and face significant legislative risk and political risk in the coming decades. So if you're looking at that, you're like, wow, what do I do? Tools to build your own portfolio. Fossil-free funds is a great tool to be able to look at this. Atmosphere, that link that I sent for you, is a really good one to help look at like your a 401k. But one of the things that we have found problematic is that when you're looking at this, what you end up getting, going back to what we saw as like the best practices in Vanguard, Vanguard tends to be inexpensive and highly diversified, but low or negative impact, right? In the high impact stuff, they tend to be concentrated, have too few companies or too few, and they have really high fees, right, as a result. And so this is the problem that we're seeing. So just to share a little bit about Carbon Collective, our theory of change is to get climate investments into every retirement plan, right? This is getting really nerdy, right? And I'm aware of this, right? So forgive me if you live outside the country, but there's a fiduciary responsibility that every company has. Now, if you've just listened to this presentation, you may come to the conclusion that investing in fossil fuels could be a bad idea on a purely financial level, right? That is a conclusion that could be there. And so if that is the case, it might put you at fiduciary liability to not include at least an option in your 401k to give you access to climate-friendly investments that really seriously take climate risk into consideration. And so that's why we're saying that if you are a fiduciary, if you have the obligation to advise in the best interest of your employees at your company, what you need to do right now is give options that may outperform. So yes, we're not saying to get rid of Vanguard right now. We're not at that place. We need to have incremental changes. We do believe it needs to be there, and that's how you protect yourself on a fiduciary level. But having active ESG, we have seen outperform against the passive ones due to the underperformance of fossil fuels, as well as passive and climate. Climate is what we're known for, by the way. What this means I wanted to go get really nerdy for a second, so forgive me. This is what is called a fund lineup in a retirement plan. When you, like, if you are at a museum in the United States and you have a retirement plan, you may have logged in when you first got there, set your options, and then never checked it again. You know, I don't know what institutions you're at. I would actually love to know. So feel free to drop your institutions in the chat. But what we're seeing is most often right now, you're only getting access to passive options. That's all you're getting access to, even though we have these big trends coming into the economy and into our markets. What we do is we add 3 different options for you that are different investment philosophies that could outperform. Some of them have outperformed based on different time periods. And so what we believe right now is that there needs to be more options. And then the last thing in our nerdy area is we have looked into the case law on this to be able to protect institutions. If you are an employee at a U.S. institution, right? If you have asked for this before, and some of you may have already because you care about sustainability if you're on this call, right? You might have heard back, oh, we can't because of our fiduciary responsibility. What we're saying is you can because of your fiduciary responsibility. What we're seeing right now is the best practice is you need to include like passive options, like a Vanguard. But this actively managed, which has been largely disabused as a best practice, there's still places that still use them as their default, right? But as long as they have passive options, they are not worth being sued because basically the judges ruled that because they're different investment philosophies, they can't be compared apples to apples. And this goes back to our fund lineup. We don't think any of these can be compared apples to apples. And we need to teach everybody why each investment philosophy could outperform so that they can pick for themselves. Now, in an organization, right, they will have certain groups of people. And so we try to give them the best default option for that group of people. So if you have, like, let's say you work at a museum that deeply cares about the environment, and you have a lot of people that work there, the default option, and they maybe they're younger too. Maybe that option that's best for them is going to be a climate option as the default. But you'll still educate your employees about your other options in case you have some people who are maybe they're going to retire sooner, or they don't, they don't trust that climate is, they don't understand that climate change is happening, and so they don't want to factor that into their investment ideas. And as a result, they don't have to have them. But again, our portfolios are, this is how we build our portfolios. We divest from fossil fuels, reinvest in climate solutions, and this all mimics the best practices of the International Energy Agency. And then we engage the rest to, like, on voting, and we have ambitions to do more, help them show like ways that they can decarbonize that will actually improve their business. So with that, investments are a powerful tool of change. Looking back, divestment was financially neutral. Looking forward, it's likely a smart one. And it's hard to find smart climate-friendly ways to invest, and that's why we exist. So we're trying to collectivize the power of our investments by making climate investing, smart investing, offering it at every organization. And now, that was only like 30 minutes of me talking. So that's a lot, though. Like, I covered so much ground here. And I love answering questions. So, like, where are you all at in terms of questions?
Well, I have a million of them, as you guys know. Well, first of all, thank you so much, Breen. I
Yeah.
think if people on the call are a little bit like me, investing is something that um, my friends who work at banks talk about, and the 401k is something that, yeah, indeed, I remember when I first started my job, I signed a paper, but I have absolutely no idea what that means or where that money is or how much money is even in there. So I think it's really interesting, and it's one of the things I always reflect on when it comes to sustainability is that when we look at our jobs, we tend to be super specialized in something. But when it comes to sustainability, we actually need to pull back and become more generalists. And while we may think, okay, what does investment have to do with culture? It is so important for us to be able to have kind of a basic understanding of the fact that this is a place that has a massive impact, and that we're seeing here that there's not only an opportunity for us to indeed move in a direction that is more climate friendly and financially interesting, but that it's something that's actually really easy to do. And it is,
Mhm.
once again, something that, maybe you don't have the decision-making power to do at your institution, but now you have some knowledge that you can ask questions about this and start a conversation about, actually, where is my retirement fund right now? Is it
Mhm.
sitting in, BP's back pocket or Shell's back pocket or Exxon's back pocket? Or is it going to, creating new renewable energy sources based on the ocean or whatever it is? So I think it's really something that we don't think about, as you pointed out.
Yeah.
It's something that is just kind of existing, but as you've shown, it can have a really, really big impact. And we
Yeah.
talk about the amount of money that is in fossil fuel investment and is continuously put in there, and we think, oh, that's the government's fault, or that's bad people who are investing in that, but we may not realize that our own money is in there. And that, to me, it was like a really big wake-up call. That was very scary,
Yeah.
that I could be investing in fossil fuels. And
Well, likely are,
yeah,
right?
and no, I
Likely
I
are.
mean, I know I am, and actually it's, because I bank at ING, and this is something that we'll all talk about in our Key Futures program in our next Talk to Action. What do you do if you work with a bank that is investing in fossil fuel? And
I
and
literally just wrote a LinkedIn post about how I did it personally, by the
oh,
way. So,
cool. Okay, well, I'll take a look at that.
I'll put that in the chat.
Yes, please do.
But anybody else like want to chime in? Devin, Catriona, Lou, I mean, anybody. I love I love answering questions. So, and I will put my little post. This comes with the thing of, I am not an expert on banking, so please don't think I am, but
I have a question because I live in Switzerland, so maybe I do not understand the US system for retirement. So
the bad system.
yeah, it's our system is quite weird too, but us it's federal, so the country yeah the not even the country, like it's subdivided. Yeah, anyway, but it's we have to pay every year since we're 21 years old to the country, and then they assure us that we will have a retirement.
It
So
sounds
I
like
don't.
it sounds like a more classic, what's called a pension system.
Yeah.
Uh, and that was somewhat common in the United States until the 80s when so there we in the United States we had problems, which was not everyone had access to a pension, but a lot of people did have a pension. So we had this problem where it's like, oh, what do we do? And instead of making pensions more accessible, what we did was we created these retirement funds, and it has increased a little bit of access for people to retirement, but it took away a lot of pensions because they're so much less expensive to run and there's so much smaller financial commitment on employers. So, but I would say pensions tend to be the way that people do it. There's some interesting places that have, because like with pensions, usually you just get the money back. And there are some places that you can choose the way in which your money is invested. Because pensions, you likely would not have access to change the way the investments are happening in Switzerland. I don't know, so I'm not an expert. I want to like make sure you know that. But there are some places in which you pay into your own account and get to choose. Australia is one of those places. They have there are things called superannuation funds that are like your pension, but you get to choose how you invest, which is I think a pretty interesting area for investment. All right.
Thanks.
We had another question in the chat. Sorry.
Yeah, go for
Oh.
I'm reading that question, so I
Oh,
think I might
okay.
be
Well,
able to.
I'm gonna
Yeah.
read it out loud for the benefit of everyone watching the recording. And I don't know, Breen, if you want to stop sharing your screen, just so that we can see everybody, that might be nice. But Lindsay asked about, are there specific keywords or phrases to look for when choosing funds for retirement? That is a great question. She said, I have mine through TIAA, for example, and was able to choose from a lot of options like Vanguard or BlackRock, but doing background research and all the options made for a headache-inducing, never-ending endeavor. I can second that. I've had a similar experience. I'd love to hear your thoughts, Breen.
Okay, so that headache that you have is the core reason we think that the retirement plan setup is like very poorly run. So when I showed you our fund list, I was showing a list of that included multiple what are called target date funds. Right? Now, target date funds are an entire portfolio that basically address the hardest question in investing, the most important question, which is like, when do I need the money? That is the most important question when you're investing. Because if you say, I'm not going to need this money for 40 years, you can take more risk. If you say, I'm going to need this money in 4 months, you can take way less risk. Right? So target date funds are, with one click of the button, they're saying, okay, if you're going to try to retire, the group of people on this call look fairly young. So I'll say like, let's say I'm going to try to retire in 2055, 30 years from now, right? I can have 90% in stocks and 10% in bonds, but it will get gradually more conservative as I get closer to retirement. The thing that we have in our option is we make it easy. So it's like you can have your Vanguard style passive options. You might not like that and you want to research. We have Natixis and we have our own climate smart target date funds. So you have easy options. Now, if you want to go beyond that, I think there's two simple things, right? Now I say they're simple, but they are difficult to do, and I want to be like empathetic on that area. Thing one is you want to have diversified investments, right? So if you're young, you likely have a mix of stocks and bonds, right? And more stocks than bonds. This would be like general rules of thumb. I don't know what your current situation is, but that's a general rule. So you would like to see like a mix of those two things. And so you'll have to go into your fund list and look it up. You will also want to see how they're investing. That link that I put to fossilfreefunds.org is the most valuable. You can look at what what are they actually investing in. That has the most transparency of any tool that I've seen. And it makes it pretty as easy as possible without it being like directly connected to your retirement plan. Because that would be really nice if they had like a fossilfreefunds.org rating or something like that in your retirement plan. I think that would be very clever. They don't have that, but this is the best case. So I do know TIAA plans, they tend not to have very good ethical options. They have one, just TIAA in general is tends to be one of the worst groups for having options. So what they will have is they will have a stock only fund. It's usually TIAA's social choice. That is a little bit better, but not much better than what you'll get. And so that would be the thing I would say that you can get. You can ask for better options. I have not seen TIAA be like particularly responsive. So I just want to let you know, Lindsay, that unfortunately, I think you might have a tougher situation than other people. Because even for your, I don't know who, like, I don't know your organization, but your organization itself may have a harder time getting better options too. Okay,
Yeah.
so you're at a university. So yeah, that is very private unis, they can switch off TIAA pretty easily if they want. I mean, pretty easily. They tend to have a lower head count, so you're looking at, it might be a few thousand employees. And when you're in that area, there are record keepers that can be much more helpful. The public universities tend to be harder because I'm going really nerdy here, and they have a lower level of responsibility, and as such, it's like individual contracts you have with your retirement plan. And so they're harder to move and get better options. But if you want, I can talk to you about your specific university anytime. And like I put my I write about stuff on LinkedIn. You can also reach out to me on LinkedIn pretty easily. But universities are tough. There are options and pathways depending on the place.
Absolutely. Yeah. Thank you, Lindsay.
Yeah, the Fidelity, there's more options on Fidelity. So Fidelity has open architecture. So they are going to still advise to keep a very limited structure, but there's options to do better on Fidelity.
Brilliant. Yeah, if anyone else has any specific questions, I think Breen's always excited to answer those. So please.
I love this stuff. I mean, I know this can be uncomfortable, but it's actually pretty amazing. And for me, I struggled with looking out into the world at times when I saw how much destruction was being happening around climate change. That was something that's been very difficult for me. I've done volunteer work, to do it. Like I'm a total nerd. So the volunteer work that I figured out was to join Citizens Climate Lobby, and I would spend my own money to go volunteer and lobby Congress people and their staff. Like I was like, that's the highest leverage point. And I still do a little bit of it. Not as much. I have a 4 and a 6-year-old. So like just dealing with that is both amazing and a lot of time. So I don't have as much time to deal with Congress people. But like, I care about this a lot. And for me, this has been a blessing because when I go and look at what's in our funds, it's not only something that I'm excited about from an investment level as an investor, but I'm looking at the world they're building. You know, we're seeing like more electric cars. We're seeing, you know, like RVs and stuff. We're seeing like little minivans that are electric that have all these cool stuff. We're seeing plant-based diets that are like better food and better food systems and more ethical about their food systems. You know, we're seeing heat pumps. Like one of my favorite ones that like cracks me up is, I don't know if you remember this from back when Trump was president. He was defending a manufacturing organization in Indiana called Carrier. Carrier is one of the foremost climate solutions. They build amazing heat pumps. They're in our portfolios. So it's like, yeah, like I've delighted in that, you know, because he didn't even know this is like yes, like let's support Carrier. But there's all these things that help me realize that there's a lot of progress being made in helping solve climate change. It is not happening fast enough, but there's so much happening. And that for me is like really exciting. So when I look at our portfolios, there's a bit of like excitement that comes with the world that we're building.
That's amazing. And I think it's such a great place to be able to see, like, here's a long list of all of these companies that have these amazing solutions, and you not only are
Yeah.
excited about that, but you're also supporting them. So that's really
Yeah. Yeah. And like you have like a little stake in them. I mean, it's like small, but it's fun to know that you have like that I have that, or that anybody can have that.
Absolutely. So I have a question, Breen, because as many of you know, I'm actually an art conservator by training. So for
Mhm.
someone like me who has just listened to this and is feeling very motivated to want to make sure that my money is going into the right place, what could be my next step? What would be my course of action? Who do I go talk to? What do I say to them? What questions do I ask? What can I do? I'm not,
Yeah.
a business administrator. I'm not the person who's making the decisions.
Yeah.
I probably don't even know who is in charge of these things at my organization. What
Yeah.
advice would you have for me?
Well, if you're really serious, like come talk to me, because every organization is unique, but they have to publicly disclose how they invest if they're of a certain size, or no matter what. But if they're over 100 employees, like let's say a bigger museum, they have to publicly disclose a lot. And so as a result, I know how to dig through these like stupid publicly disclosed forms, and I can tell you a lot about them. So that is, I mean, but that's not as helpful as saying the likely thing that you can do is go to your head of HR, head of benefits, and at a nonprofit. Sometimes it's like a head of operations, the person that you go to ask about a 401k and say like, hey, I really appreciate this benefit that you guys are doing. And maybe you can throw in like, I saw a report that Google has had $1 billion shortfall because they've invested in fossil fuels, and it may be smart for us to have more climate friendly options. Can you look at them? Just ask them to look into it. It's not change. And then if you can't, I love talking to people. I try not to be, I'm both very opinionated, but I try not to be salesy. Like, and what I mean by that is like help educate them on what are good options on a go forward basis. Right. Like where are you at as an organization? Like you might be in a place where all you want to do is add a couple options and an ability to educate on those options. But I tend to find that there's not a lot of people that like doing the education. And so in that case, like that's where I become really helpful, is like, in addition to building the fund list, like I can help make an HR person's life easier. And that this is me thinking of like, what are like these invisible solutions to climate change? And it's like making HR people's lives easier is actually a climate solution for me.
I mean, once again, it's always making anything easy is sustainable within of itself.
Yeah.
It's when you pair that with climate solutions, it's a win-win. So
Yeah. So I have that. The other thing is there might be a green community groups inside your organization, especially if they're larger, employee resource groups. I don't see this until the companies get, more than a couple, or organizations get over a couple hundred people, which would be large for a museum. So I don't know how large the organizations that you all are at. But there might be groups of people that like help on Earth Day and organize events, maybe organize, you know, things that are part of the museum that are strategically aligned. But again, talking to your HR person is going to be the best bet, and asking for better options. And I'm happy to help you with that. You can also do this with your old 401ks. So one thing that I've seen is there's $1.65 trillion in stranded 401k assets. Lou, this goes into like why your system is better than ours. So no, I'm serious. So your employers own the accounts for which you invest in the United States. And when you change jobs, your account doesn't follow you. It's still there. So if you've left your old job, you have to go reclaim that money and move it yourself. This is not the easiest thing, but it's important to take back your money, because like we've had people be like, oh yeah, I forgot I had an account there. And they go find that they had like $41,000 in investments there, right? Like this is a lot of money. We've seen like larger ones too, but like sometimes it's kind of embarrassing how much people have that they have like forgotten about. But this is like very really there, and please take control of it. You don't have to invest it with us, but like we are not doing a great job as a country providing people with long-term financial security. And this is one of the reasons why, is because people don't have access to their or forget about their old money that they have. And sometimes it's just a little bit, it's like $500 or $1,000 or, but like this is meaningful over time, especially as it's invested.
Absolutely. Yeah.
So you can do it on your own too.
Yeah, that's good to know. Sorry, go ahead. Does anyone else have any questions for Breen? Yeah, go ahead, Lou.
Oh, I'm sorry. Do you want to go first? No.
Oh, well, I was just going to ask very quickly what advice or what you might add to your presentation for independent arts workers, or those who are, in the field, but not tied to an organization or a larger institution that might have a 401k.
Yeah. Well, one, I like the fact that you're doing it, like blessed you, because that's a tough position. We can help you invest on an individual level, and that's usually how it's done. So I would say if you do have past experience at an employer that has a 401k, make sure you have that money in your control, and we can help you on your investments there. You can do your own investing. I tend to find that art people don't like doing their own investing. I meet people that do really love it too. Like I'm actually an art person. Not in like visual arts, but I was a writer, right? So like I have a degree in creative writing. But I love numbers because like every numbers tells a story. So I come at it at a very weird way. So on the individual side, look at that. I know I would also say just in general, like keep doing what you're doing, and like there is so much hope out there to be shown in your art capacity too. Like you have like so much talent to be able to help envision a better world.
Thank you. Lou, go ahead. And then I think Anna also had a question. But...
Yeah, I just had a question. Do you know how we could, how can I search to know where the retirements I give each year to Switzerland goes? Do you know how, to whom I could, where could I find this kind of information? Because I Googled it and I couldn't find nothing.
I don't know. I'm kind of interested. I don't know that answer.
Okay, well, I'll try to
find. Swiss person ask me
What's
that.
your pension fund? Because I'm in Switzerland too, so maybe
Oh,
I
yeah.
can help.
Well, we don't have funds. Do you
Non,
have...
non, non, c'est une caisse. Ouais.
Ouais.
Mais je pense que tu peux regarder. I don't know. Mais c'est la VS. T'es où? Sorry, in French, 1 minute.
Sorry. Yeah, Neuchâtel et Canton de Vaud. J'ai fait les deux.
Oui, c'est le truc du canton. Donc,
it looks like there's occupational benefits plans. That would be the place. So it looks like you have 3 systems.
Oh. Okay, well, I try to search.
I need time.
Canton.
Like I
No
will
worries,
look at this. I will look into this for you. I'm not going to be an expert in like the 30 minutes I spend looking into it, but I will be able to point you in the direction of what to do there.
Thank you so much. That's really nice of you.
Yeah, I'm a nerd. I love this stuff. I'm like, I don't know how Switzerland runs its pension system. Like, and I already know, like, my brain's like, this is what I would Google, and this is like what I'll do. I I'm a very curious person, so this may work out to your benefit.
Brilliant, thank you. And Anna, you also had another question.
It wasn't really a question. First, sorry for my microphone earlier. It was more like an observation because you were talking a lot about teaching and, and I feel like even more than teaching, what you're giving with those type of advice is really empowering people. And I know you're talking to a very young generation over the call, and sometimes it can feel overwhelmed and that you are powerless of stuff. And I think just, the question you're raising sounds, I don't think a lot of people are asking themselves this question, where does my money actually goes when, I invest in this and this and this, especially when you're a small investor. I mean, when it's not your primary job and you're just like working and then putting your money at the bank or whatever, you're trusting institutions. So just the fact of raising the question, I think it's super interesting. That's it.
Yeah. No, thank you. I mean, it is empowering, right? Like when we look at the systems that we have in our world, right? The two biggest levers there's like three big levers that I see. One is like culture, right? And this can be like expressed as like consumer behavior or how we behave. And this is where like museums actually play a role of like helping people imagine what's possible. This is where like the film industry plays a role. So I think you have this like religions play a role into this area. So you have that. The second thing is money, right? Like money's amazing. Like it gets people to collaborate across entire continents for like a small multiple hour project for like maybe $200, right? Like that's incredible to me. But there's a whole set of systems that we have around how we use money, how it's leveraged back. And that is something that we have done a really, really poor job explaining how that system works and how you can make it work for yourself and how like, it's connected in general. This is where like one area of empowerment is. And then the last one is in politics and in government and citizenry. I don't think we've done a particularly good job about helping the citizenry understand how it can make its government work for them and how they can make like the government work for themselves. So it's like there's these three large systems. They're all interrelated because like culture helps define what becomes the rules in government, which defines, what systems we use in finance. But then finance has like its impact on culture. And so it's like these three things I look at. It's like, but we're not even taught about this larger human society that we're connected to. And I think that's a mistake.
Yeah, I think that's really interesting. And I know that especially in like the cultural sector, so, museums, art, like we're not empowered even to talk about money. And I think that there's this kind of like lack mindset that we have as cultural professionals to, money is taboo, money is something that, other people deal with. We're not in this for the money, so we're not going to talk about the money. But at the same time, that limits us for so many different things, not only from a sustainability perspective, but also, thinking about the opportunities for impact. So it's important for us to talk about money, where it is, where it's going, what we're, just getting more comfortable with some of these terms, as I've started my own company, like looking at things like investment and shareholders and all of this stuff was absolutely Chinese to me, a year ago. And it's a steep learning curve, but actually it's, in a lot of terms, it's very simple. And in a lot of other terms, it's also very important and impactful. So it's exciting to get to start thinking about these things. So
thank you, I mean, Caitlin, I think you can do this though. And I think that's the point of this whole presentation is like there are systems that we need to engage with to help build the future that we want.
Exactly.
And it's hard, but it's worth it.
100%. That's what gets us out of bed every day, isn't it?
Yeah.
Absolutely. That's brilliant. Well, I know we're at time, but I did just want to open up the floor. Does anyone have any final questions for Breen before I let you all enjoy the rest of your days? Okay. No, we're good. All right, fantastic. Well, it sounds like Breen is very open to continued conversations, so
Yeah,
if
reach
you
out anytime.
And just thank you so much for being here today. I think it's really, really interesting, and it opens up a whole new world of possibilities for us as the cultural sector of how we can make positive impact and also how we can make impact as individuals. And I feel more empowered. I hope you all do too.
Great. All right,
thank
love
you.
it.
Have a
Thank
wonderful
you.
day.
Bye.
We'll be talking soon, and we'll see you guys next week and for our continuing workshop on social sustainability. So thanks, everybody.
Thank you. Bye.